Hey everybody, welcome back. S&P holds right in here. We've been forming this base on this control bar. And when we zoom in on it, we can just see that this bar is in control. Every single time that we get up to it, we are rejected. What I do like is the undercut here. Now we're going to talk about the NASDAQ. The NASDAQ move today was critical, and there's one thing in particular I like about it. If we mark off, once again, the control bar from here and here, we'll note what we did. The low end, we're unable to get over, but the undercut here and then the rally back through and including this is significant. So we measured this line coming straight across, and that gives us a 50% line. Once you have 50% and you were over that 50% from the undercut, you have a piercing pattern. These piercing patterns are definitive as spots where you might be forming a bottom. And there's something else here. I use a 55-day moving average, and there's a couple of reasons for that, which we'll get in at a later date. But if we look right here at this cross, we undercut, looked like we were going to flush, and then went back through the open and rallied. This is significant because what they're doing here is they're looking for stock. In other words, they're looking for supply, or we would have followed through. Here, take a look at this. Now, if we just drop this to a 1-minute chart to get the devil's always in the details, we look at that 50% line and we look at how we ran, came back, ran. So what you're going to want to watch tomorrow, and I certainly am going to watch, and we all know we have a key event tomorrow night, which we'll discuss here in a moment. Once we get to this level, I think this is really important for us to note, because what's important about it is once you're over and you flip it, you've made a higher high on a piercing pattern on the index after the undercut. Now this line right here, interestingly enough, that's going to take you to that 474 that everyone's watching. What people aren't noticing is that that's also the 55 SMA. So we had a trade this morning where we actually shorted right here and did very well with some puts. And we just got out of the way, made money, moved on with our lives. But the rally was substantive to the point to get you over the previous day, close, and then to continue to grind. This is exactly what you want to see on days like today, because what it's doing is it's getting retail out, shaking retail out, and then what you do is just look for the rest of the day, and essentially you had institutions just out there picking away, and we could see this into the close as well. Now, it wasn't just the NASDAQ that had this pattern. If we mark the peak from here to the trough down here, you're going to notice that we are at that 50% line coming straight across. And I think that's pertinent. And we've looked at this a little bit in the past, but I think it really hammers us home to do it again and just drop the anchored VWAP there and see that, or rather the anchored point of control is really what I want to focus on before I get to the anchored VWAP. So see where you're sitting right there at the 50%? See how it's holding right in there? I'm not going to have time to edit this either, guys. So we're just going to have to deal with the unedited version. See how you flipped right here? And you held the undercut. This is a really big area of confluence. So I have this peak anchored VWAP. I have point of control, which is where the majority is owned. And I also have the 50% demarcation line. And it's all sitting right there. You undercut all of it, and then you're bouncing through it at the end of the day into Nvidia's earnings tomorrow, which brings us to Nvidia. And if we take a look at this coming straight across, we're going to spend a little time on this tonight because of some of the notes I have. I think it's important to go over. But we mark that peak level, well, we're over. If we came here and dropped the same exact situation here from that peak over, you're going to see you're right there again. And I think that that's important. From that peak, you're right at that point of control. So you can see the battle that's going on over there. Remember, VWAP is the volume-weighted average price of all this. Point of control to me is just as important, if not more important, because it's saying, okay, from this point on, the majority of people own stock right here. Up, over, under. So you can see the battleground, and you'll ask yourself, like, why is this happening? That's why it's happening. And I think that's very important to note. So what we're looking for here is we're looking for it just to flip this area, and you're either going to do that tomorrow night or not tomorrow night. Now, before we spend a lot of time on the video, there's a bunch of other things to go over, but we should because of earnings tomorrow night. Now, to put things into perspective, what I've done here is I've overlaid everything. So in other words, I have overlaid the Nvidia with 40 sectors so you can see exactly what's going on here. Sometimes I'll do this and just go, okay, well, where do we fit in on the day? And I think it's interesting because if you were to look at today and say, well, what led? Semis led. Semis led ahead of Nvidia. So out of 40 sectors, the major sectors, Nvidia led all of them, and the semis led. So while you would say, they don't know what they're doing or they're selling tech before this, even though it was slight, it's there. And so I kind of felt like they were trying to hide themselves a little bit today. You can see what's going on with gold, XLK, even Apple. We have to spend some time on the games that were going on there. And before we do that, I just think you have to take note. IGV. So we're seeing a lot. The NASDAQ's up. So everything that would be firing very quietly that you wouldn't expect to be up is up. And I would not pretend that that's not. And on top of that, we still saw the same interest rate trade. A lot of these interest rate names have been moving. This is actually something we bought for a swing trade on the 9th. Bought it right in here, and you can just see how we're doing. Big difference, guys. You have to know when the day trade, when the swing trade, and when this boils down to the macro, the fundamentals, and the technicals I constantly talk about. But you have to know where you are on the trade, where you are in the stool. Right? And this is pretty much an interest rate trade. But that whole sector, that whole trade's working. It's just grinding and grinding and grinding. It's just very boring, and people don't want to see that or talk about it, but it makes money. I mean, all it does is just grinds, and I'll show you a couple of really simple ways to see how that's going. But I think you're heading up to this level here. But it wasn't just that name. We saw a lot of people talking about a firm going into its earnings, but most important, you can see how that's acting. You're setting up here again. But it's also those individual names that are just interest rates that just keep on grinding. Like look at MO. There's nothing to do here. I know it's not great, but I paid 49, 48, 49 for it, and here we are at 53. Haven't lost a night of sleep, and I get 7.5%. And then look at BDT. Look, I mean, it's silly. They just keep going. This is at 2-year highs. So again, I know they're not the greatest names. I know it's not, as they refer to it, sexy, but all-time highs on regional banks, if you know which ones to buy. So that trade is alive and well and is not something that I would sleep on or just blow off. But I do think we have to spend some time talking about tech here and what's going on with the McClellan Summation Index, because people are getting somewhat confused. And I just want to point this out. This is the XLK. And does that pattern look familiar? Because it's once again a piercing pattern. And if you know to look for these, you'll see them everywhere. You've undercut right here, just like you did, and then just like the Qs did on the 55, and then you flipped. Usually these are bottoming patterns. And I find that fascinating going into the Nvidia numbers. Now, once you flip, you're pretty much heading to that level, which is about 1.5% from there. But you're really relying on earnings. So when we look at charts, and they are important to note the behavior, should Nvidia falter at all, these charts are going to look completely different tomorrow night, and we all know that. But I do find it fascinating that you undercut and that you went there. The other thing that I would say is start looking at these support levels. So after hours, you're starting to see Nvidia kind of grind higher than that Thursday bar. And this is exactly what I'm talking about. Start looking for these names, because what I think they're doing is I think they're playing this ahead of Nvidia. For example, if we go here and look at this, let's just drop it to a 1 and then you'll say it. It's as someone likes to say, it's absolutely glaring. But look at this 25 level. I mean, it doesn't really get more obvious, does it? I mean, over and over and over again, you can just see these levels. And I think that's really important. So even if I just went here just to highlight it a little bit more, you'll get it. You're constantly hitting these levels. You're not breaking down. I think we've hit here now 1, 2, 3, 4, 5, 6, 7, 8 times. And every time you've hit in there, you've held. And I think that's very important to note. Like maybe you could say, oh, well, here we undercut a little bit, sure. And then you're getting to the top of this range, but you're riding the top of this range going into NVIDIA's earnings. But these ranges work both ways. So once you flip, for example, everybody knew if you were looking at Tesla on a daily, like you should know that 210 was a huge level right around here, which is going to put the low of that bar. And also it lies right in here. If you go into the plane, it gets you under that 55. It gets you under all those moving averages that are in here. So it really puts you in harm's way, right? But now if you take those levels, I'm going to leave them in and go to a 5, and you start watching them, okay, and then drop that to a 1. Well, this is pretty obvious. You saw it this morning when up, tried to get through, tested, and then broke. And then that was it. And then it was on. This was something we actually did a day trade in. And this is really important too about this market. And I want to preface this before I show it. You need to be aware of where your targets are, but you also have to trade what's happening. So one of the things I will always preach to people that are learning how to day trade or that do day trade is you have to pull money out when you don't want to. So when these are dropping and hitting new lows, you want to pull money out. Breaks a new low, you're pulling money out. Rallies back up, breaks a new low, you're pulling money up. And what that does is that's going to put you in the position where you're going to get a better average price than if you're waiting and getting out into this or you're getting out into that. Your pricing will be better. Here, take a look at this.
Looks like you're going to get worse there, doesn't it? That's not good. It's a big flag, bear flag, right under that level. I don't think you're going to hold. even worth trying. It's ugly. Sure, I'm going to use the high. It's going to size accordingly and just use the high. That was fast. If you're looking for a tighter stop, just use that bar right there. Tesla's got problems here. And you got an issue here. Like you lose that 204, then you got a gap. These are your levels if you break. Go watch that though. Shadow just did that. So like into this, I'm pulling stuff out, like right into that level. As I get closer with those wicks, I'm actually pulling money out. I'm not waiting. I'm just pulling stuff out into that. You lose that's a long way down. One market rallies, this thing can't get up off the ground. Your highs on the SOXL, your highs on TQQ, Tesla hitting lows. No love at all. No hurry to close the rest of this. When he breaks like this, I trim into them. As soon as it breaks, I'll just trim just in case they're stop hunting here. And that just keeps giving me positive slippage on the trade. This is my target, 204. Now that I broke, you can see the retest. There's nothing here.
So while we're always hoping for that, big drop, you don't know that you're going to get it or what you're going to get. I would say that on this 55, the break, the retest, and the break again, you just want to watch. You look like you were going to drop down. You do have a lot of buying out of there in the market in general with CTAs and corporate buybacks. Historically on 24, you're at levels that you haven't seen in some time. And I do want to show this before we go any further. I do think it's really important for people to understand your time frames, because a lot of people will look at this and you'll start swinging all around. This is the New York Composite, and below is the McClellan summation. And what I would point out is what you're trying to do is you're trying to look for these flips. These flips tell you everything. You can go and Google what this is. For time's sake, I'm not going to go do it tonight. I have done it in the past, but what you're looking for is when they open up and then how they act when they open up, specifically around that zero line. When you see us over that zero, it's huge, but the opening up of those is really what moves you. But you want to get up over the zero line. That's the most important thing about it. And you can literally go through this over and over and over again, and you'll see it. It's very hard to miss. You can also look at the corrections and say, okay, well, we're rolling a little bit, so we're going to underperform. And it's usually that underperformance is pretty obvious to spot. But when you get to certain levels, historically, 600, 700 on this, it's an area of interest, same on the downside. But what you're looking for is you're looking for these crosses. And when you have them, you pay attention to them. Now, does that mean that every day is just going to be a fluffy cloud? No, that's not what I'm saying. But I am saying that you do want to pay attention to this. And this does tell you that things look better than worse. This is a different way of measuring breadth, candidly. Now, if we look at the sectors in and of themselves, I've sorted them here. And we can see very clearly XLK led. Did it lead by a lot? No. But you're being led by tech and you're being led by financials, which are hitting highs. So this does bode well for the market. And here we are at 220 on JP Morgan. And a lot of people are out there going, well, it's not really that exciting. You're just grinding. That's all you're doing right now. It's very low volume, and you take what you can get when you can get it. And this is what you have right now. You still have Nvidia Wednesday night, GDP Thursday. You have PCE Friday. You're not seeing a ton of discretionary money being committed. You're seeing it on the other side. The systems are committing the capital right now. But of all things, tomorrow night cannot be, I can't stress it enough how important it is. And I'm going to show you a couple graphs here that's going to show you just how important it is, actually. It's more important than what people think it is. The idea of $14 to me is somewhat laughable, just because we have so many people that are saying it's going to miss, and we have so many people saying it's going to beat. If it misses, the stock's going to get crushed. I mean, it's going to get absolutely crushed if they missed. And there are some analysts that are calling for that. There are other analysts that are calling for it to beat. But the idea of $14, and that's all you're going to see, I have a very hard time believing that. Now, people say because it's such a big company, you have to remember that you have gone from back 18 months ago here, where we were supposed to earn $1.50 in 25, to now we're earning $4 in 25. So the leverage here, people don't understand it, and they don't even understand the valuation. They don't understand that the stock's actually cheaper here than it was here based upon valuation. And the reason for that is they just look at the price. They don't understand the earnings. Very few people understand that Nvidia's 25 numbers have over tripled in 18 months and what they're expecting for 2025. Most people don't get that. They just look and go, oh, it's too high, and that's what they sound like. But they don't really have a clue. And I think that that's really important to get. To me, if you didn't know what it was and you were looking at it, you would think you have a flag. You're up the top of that high tight flag, and you're setting up to break out. Whether that happens, I can get as technical as I want. And we saw it today, and you're seeing a lot of this. But I can get as technical as I want. It's not going to matter tomorrow. It's going to matter are earnings. Everything else is going to be immaterial. And I really want to stress that. We always talk about the macro, the fundamental, the technical. And here you have the macro picture. And it's going to shape because if you lose the big dog, if you're going to lose AI tomorrow if this doesn't work. And that's going to affect the NASDAQ greatly. Bigger, again, more than people think. Fundamentals are all that's going to matter here. And there's some people here that think that Blackwell is going to be an issue and that's going to slow down sales, things like that. If it does, well, it's certainly going to be an issue, that's for sure. But what we're going to have to do is we're going to have to see how this plays out, and we're going to have to go from there. What I think that you should do is just have a decent game plan on what you're looking for and go from there. I'm going to give you some idea of the significance of this now and what you need to be looking for tomorrow on the earnings. And then, of course, the conference call is really going to be the devil in the details. But any of these levels, I think personally, they're going to be immaterial to what happens tomorrow. So I have some clips from some of the research that I have. If you aren't aware that I do read a ton of research, and I'll just share some of them that I thought were interesting. Positioning at 125 today feels a lot cleaner to me than it did when the stock was at 125 back in June. Inbounds from non-TMT, meaning the technology, media, telecom, folks, is down quite a bit, meaning not everybody's looking at Nvidia right now. And the specialist community, much more balanced. There's dialogue on the name, meaning it's just not fervor. Now, what that's telling you is that people aren't weighted heavily and there's not that speculative excess that we had last quarter, even though the stock went up last quarter. Now, this is what we have from the JP Morgan desk, and I think that this is pretty important. At TMT, the telecom, media, tech. And they have specialized traders for them. So it does not appear that we have regrossed at the level seen before downturn from mid-July. Regrossed is a nice way of saying the people that sold didn't buy, just a fancy way of saying it. Early August and across the street appears that aggregate TMT positioning is underweight the sector, which may mean that risk reward from Nvidia is skewed to the upside. This is how these guys are all leaning. That are the big dogs. You have the ancillary guys, the Northwesterns, those kinds of companies, the Deutsche Banks that are saying to the downside. Anybody could be right. It could be a coin toss. I have my belief. It doesn't really matter. We're going to find out what it is. But skewed to the upside is what JP Morgan, and that's what they're telling people. Now, this pretty much sums up what he's saying about regrossed. So in front of you are global semis and the net exposure to the entire market. So if you look at the entire market exposure, which is down here, and then you look at global semi exposure to the entire market. So you look at it from a global standpoint, all this money, and you were overweight semis for a very long period of time. And now in here, semis and the entire market weight of the people that buy this, look at what they're doing. They're in line. I think that's very important. It shows that people are not overweight. Like everyone thinks, oh, everybody's in this name. That's not the case. Now, if we take a look at this and say, well, what is the significance of this event? Well, here's Nvidia's earnings, GDP, and claims on the week. Look at the volatility on this week versus everything else that's going out for the rest of the month. So over the next 30 days, this is it. It starts tomorrow night. I think people are grossly underestimating what Nvidia is going to do to the market. And I really want to hammer that home. This is bigger than anything else that we're going to be dealing with over the next 30 days as far as volatility. I mean, you're actually bigger than the FOMC, which I find fascinating. Now, if you're in the community, you have seen this before, and I'm just going to run through it again here. And by the way, if you're on the wait list, please look for an email. People that are on the wait list are getting those invitations, and they will be going out again this evening. So just be on the lookout for it, and then we will go from there. But I just wanted to let everybody know that because I did get some requests today to be added, and I did add people. Our colleagues at CapEx forecast point to a 12% year-over-year increase in cloud CapEx. Okay, so if these guys are 40, 50% of their business, Nvidia's business, and they're all increasing their CapEx, does that look like a little increase? I mean, when you start looking at these increases, they're not small increases. You had these huge jumps in increases, but you have names like Microsoft. They're like, okay, well, we jumped big and now we're going to flatline. Are these guys flatlining? No. Flatlining? No. Flatlining? All right, I'll say it again. They're not flatlining when you look at this. They're actually ramping up. So the idea that this is going to slow, I just don't see it. I want to preface this with anything can happen. Now, since March of 23, I've been using them as the gold standard, Goldman, on the street estimates and how they see the world. And one of the things I'll just show is what they're already saying is they're at 4% different on the revenue side. So they're still saying that they're still saying that the earnings are coming in here versus the streets at 64, we're at 68. And they're still saying 79 versus 71. and that is an 8.9% difference. And I think that's important. I think it's important for people to know this because for the past 6 quarters, they've nailed it. And they're saying, once again, we think they're going to beat expectations. And the expectations are fairly low right now, guys. Long or short does not matter. Bull or bear does not matter. We will find out tomorrow night. That is it.